Hi, and welcome to another episode of IC Data People. We are here with Kirk McKeown. Kirk is the co-founder of Carbon Arc, a decision intelligence company. Prior to Carbon Arc, Kirk was the head of proprietary research at Point 72 Asset Management. And earlier in his career, he was the head of proprietary research at Glenview Capital and an analyst at Tudor Investments. Kirk, welcome to IC Data People.
Hey, good to see you guys. Thanks for having me.
So Kirk, I gotta ask, so you've been the head of proprietary research at a massive hedge fund. That's a huge responsibility. You're turning raw data into insights. Can you just start by telling our audience about what your process is for ingesting raw information and turning that into usable, actionable insights?
Sure.
Sure.
Speaking at a high level, one of the things that is really important in building out these systems is actually building out a full system. And what that means is, sort of really going from end to end to create data pipelines and fundamental frameworks that allow for, business users, investment analysts, anybody who's trying to make a decision, whether it be around a company or a stock or even a decision in sort of a day to day, really marrying that raw data all the way at the beginning to the business logic that is required to drive a decision, right? And what the problem with that, the hard part about that is it takes a village, right? It's not one person that can do that, right? It's your engineers have to have some level of understanding around what the business problem is, and your business problem people also need to understand all of the basic elements of bringing in raw data and cleaning it and structuring it. Um, you know, Sort of, we've always been a big believer, sort of in the world around, structuring insight is really about sort of getting to that point of contact where the decision needs to be made. And in order to, in order to really pull in the data the right way and structure it the right way, you have to understand what it's going to be used for. Right. And so it's really about building the whole system so that everybody speaks the same language and knows what the goal and the problem statements are.
You mentioned quite a few challenges of building the an end-to-end system. What do you think are the biggest challenges you faced while dealing with data?
It depends on the day, but what I'd say is that is an evolving context depending on the maturity of your platform, right? So when you're first starting out, it's really about getting your data quality and cleaning up to the right place because there is a process there of iteration and engagement. You don't get to a 99% tagging framework in the first round of tagging. There is an iterative process. So data quality is something early on and getting the data quality systems and architecture right, the alerting systems around, every node of the supply chain inside your firm, thinking about, did you get what you were supposed to get? Yes or no? Right. What is the SLA with your partner? Is it being met? And then it's, so you're tagging and you're deduping and you're looking for changes in the data. And you need another alert, right? So there's an alerting system that needs to get built. Once that's built, it should run and operate on its own. And then it's really about fundamental context. Is credit card data good for the dollar stores or not, based on how dollar stores run their business? Is it good for, sort of what are the things you can learn from a certain type of data for amusement parks versus others? Because the business model and the way these companies make money might not tie out to the underlying data asset that you're using to predict the business, right? Those are questions that start to happen. So then it becomes around the fundamental frameworks that become hard to scale because there's a sort of a handoff at some point. Then do you have enough data? Is the data long enough? How do you augment it? How do you create more history if the history isn't there? These are the different problems. And by the way, they're all fun problems to solve. And there's no sort of great answer. And the solutions do get better over time. But fundamentally those, I just named a half dozen probably, but that's the way I would think about it is it's like the evolving context is really about sort of centering around getting to an actionable insight that's better than what you can do without the data.
You're serving both the hedge fund industry and corporate clients. How different are they, or how similar are they in solving their day-to-day challenges?
We've largely been focused on corporate to date. which has been frankly, after 20 years on the street, it's been an incredible, you know, path and journey in learning about how sort of companies and businesses think about data driven decision making. But at a fundamental level, what's interesting about the corporate space is the problems that they're solving are actually really in the guts of the business, right? It's sort of at a fundamental level, you're trying to predict cash flows and understand changes in cash flows when you're sitting inside of a fund, because you're trying to figure out two things: what a company is going to earn and what people are going to pay for it, right? Against a near-term catalyst, and do you have a differentiated view, right? At the end of the day, and then rinse, repeat, and really work to build a systematic framework around delivering insight at scale that is differentiated and predictive, right? Um, the problems in corporate are sort of much more pointed and much more deep into the how do we drive more cash flow by pulling apart the CLTV equation, right? Acquiring customers, converting those customers, getting them to buy more things, and then keeping them for longer. You're getting really into the guts of these businesses, and so what we're seeing is, which is cool, is we're really trying to toggle the algos that drive demand management and supply management. And so the problems that we're solving are massive for the companies that we're talking to, but are playing in a different layer of the funnel than where you traditionally spend. Sort of because some of the data is different, right? So the problems are evolved in the sense that they're further up the stack, and the data is different, and every company wants, frankly, to solve their problem from inside out, right? So their first party plus our third party, and sort of bring a better solution together that allows them to do their core competency better, right? And so it's an interesting context because one, you're predicting the future from outside the firm, and the other, you're trying to impact the future from inside. So it's pretty cool.
So, Kirk, you just alluded to the question of different data sources. Yeah, I think there's always a tension between novel data versus data that's a well-trodden path. People know what to do with it. But there's also a tension between what is the best data versus what's the best methodologies. How do you think about that balance? Are you able to make up for bad data with great methodology? Or are you really only on the hunt for the best information sources all the time?
I would say I would change the word from bad, right? I don't think there's any such thing as good or bad data. There's just data. It's just at what price, right? Um, and what I would say is, I think the data you need, is driven by the business problem you're trying to solve, right? Um, and I think that a good partner acquisition strategy is very closely tied to the product team and the data product team who are building the insight products for the companies or the industries that they care about. And I see sort of the best strategy is a combination of broadline, what I would call commodity or commercial data, married with vertical, sort of specific, enriched, contextual data to the problems you're trying to solve. Right? It takes both, and then it really comes down to more data and better questions. Right? Like that's the main way you compete. Right? You got to have relevant. You got to be asked in the relevant. You're going to be in the relevant space. You got to ask differentiated questions and have differentiated data, and you got to make it accessible so people can consume it. Right? But in the differentiation piece, more data is better, and better questions are better. And so it's driving your team to ask better questions. But I do think novel is always going to win. If you look at sort of where we're going with some of the LLMs and everything else, if everybody's building LLMs on the same data, the models are going to be asymptotic and the same, right? Fundamentally, the requirement is going to be for massive standardization of data inputs that are structured for models to engage with, and differentiated collection mechanisms or data partners that enrich that model to be different from the one down the street, right? And so I do think novel data becomes more and more compelling as large models proliferate. But you can do a lot of damage with just a credit card panel that everybody has if you have a great pipeline and a really rich front to back system where your sort of insight analysts and analysts can engage with the data and ask better questions. So it is a combination of organizational alpha and then sort of data alpha.
Kirk, I'm sure in your time you've seen a lot of alpha coming in from the data, from the infrastructure, from the different processes that you've set up in place. I wonder if you can share with us what was the most powerful insight you've seen from data, either recently or in the past.
Oh man. You know, One of the things that I think we've, sort of, if you look back over time, sort of, I think the insights have evolved, right? So like, what's cool is like in 2014, if you were, sort of using credit card data, it was trends, and catching trends and really understanding it. And then sort of, looking through the years, the problems that you're trying to solve are actually, sort of everything from, business momentum and engagement to uncovering differentiated patterns in underlying data to detect fraud, right? So there's really interesting stuff there. Sort of, we've recently, which was cool. We had some, we were able to look at some, sort of video and TV data, and to understand, and we were able to parse, and I'm going to protect client in this, but we can talk about it. Famous actress, sort of trying to figure out, next contract on a franchise, and wasn't in the first couple of movies, and then was in the third movie and going into the fourth. Sort of one of the things that we were able to do with the massive amount of data we had was separate, sort of the different types of fans for the franchise and pull it apart like you would pull apart, sector versus stock with, sort of factors, and really understand the impact of that actress on the franchise, and the composition of the viewers underneath to sort of create a story around, sort of why she, was crucial to the franchise and sort of, sort of helped with the conversation around her place in that space. And I'd speak more, but we have our relationships, one of the things that we're working really, dynamically to do, in the world is like, we think that, insights are structured products, and structured products can be factored like stocks. And so pulling apart all the different elements underlying around, these pieces around resonance and momentum across, brands and actors, actresses, musicians, songwriters, it actually helps to create far more textured space to deliver insight around, sort of how they operate in the world versus each other and versus themselves over time. And so, it does isolate some of the bias and data and everything else because you're building a factor framework into it. And so that's been that insight creation has been, super valuable in thinking about, sort of some of the problems around, understanding, change over time.
So, Kirk, you just hit on the idea of essentially using a human being, in this case, an actress, but I think the same could be true with influencers across industries, essentially as a product. We are testing what the market is around that product and who the users are. I'm curious, as you think about kind of where this goes in the next, in the next iteration, not only do you see that being how influencers are measured by their audience, not just broadly speaking, you have 1 million followers, but you have 100,000 followers in this demographic and 5,000 in this one and 500,000 in that one, or are we a long ways off from that level of granularity?
Look, I mean, I think with more data comes more granularity, and sort of, there's a fundamental problem in the data market, which is data has historically been, captured largely by walled gardens and big tech. And so, data has not been a freely fungible sort of asset class that has moved around in a standardized way. Right. So it's still like, you know, yeah, I always use the analogy of like when I want, corn with my chicken, I go to the supermarket and I buy corn niblets. I don't go buy a cornfield. Right. So like, sort of, at a fundamental level, data sits all the way over here. And then the insight is all the way through multiple sets of people, a large transaction where data is bought by appointment. We actually think that fundamentally, inside liquidity has been sort of hampered by day liquidity, and there's a chicken and egg problem. Um, Over time, the standardization, ChatGPT and 3 and 4 and large language models, large learning models, um, they are going to sort of force the conversation around the standardization of data in a ratable way, and using financial system first principles and financial technology. Like we think there's a world where you start to see data move at the insight level in a meaningful way. And to that point, the more data you have, the more granular those studies are going to become, right? And just like you saw what happened to equities from 1985 to today, you went through a cycle of the quants rising in the 90s to ETFs in the early to mid 2000s to factors. And those are just scale points along sort of a maturing market where capital flows in and the need for, sort of trading assets becomes greater. Right. And so, in the same way, I think you could see the same thing happen to the data market over the next 5 to 10 years as models on the front end drive the need for higher degrees of compute and more data to power the models. Right. These models are really hungry. And right now, there's just not enough data out there in a structured and standardized way to take advantage of sort of the synthesis engine on the front of the house. And so I do think, to your point, you're going to see things get pulled apart in a meaningful way, not just actors, actresses, but, sort of locations and, sort of, and even personas, psychographic profiling will become sort of more and more apparent as there's more data to inform those underlying models. It's for the last 15 years, social graph and has dictated who you are as a human. But as you sort of move into a world where transaction data and consumption becomes far more prevalent as an insight driver outside of just the traditional Wall Street, sort of dynamic of, trading stocks, you're going to see more understanding around how people spend their time and their money. And that's going to drive this sort of elemental understanding of, sort of who people are and sort of what constitutes the brand following for Nike or for sort of Tom Hardy or any of the, pick your poison, because those are all just entities in a framework that have a psychographic profile.
So I guess you started to answer a question that I think we've asked every one of our guests, which is, where do you expect the data world to go in the next 5 years?
Yeah. So, just to build on it, I think, sort of the data world has formed and grown over the last, to call it 10 to 12 years. If you look back, there was satellite data on the street in 2010, 2011, and people were counting cars in parking lots at Walmart. And then, the first credit card panels started coming out in like 2011, 2012, 2013, and scraping was always around. And the tech stack, sort of evolved with it, like early days of big data were Hadoop implementations out of Cloudera and Hortonworks. And then that evolved into sort of your, warehouses and stacks with like Databricks and Snowflake. And that's how the world has grown. And what's interesting is, sort of, I don't think this is a technology problem. I think it's a system design problem, and I think it's a market problem, right? And if it's a market problem, the system design has to be whole hog, and it can't just be point solutions. And so, do think that you are going to see a real push in the coming years around how do you create standardized data products with privacy overlay, governance, compliance, structured frameworks that allow for insights to flow more freely than they do. Right. And I think it's an interesting context. If I'm going to be provocative, I think New York as a hub and a center is actually set up really nicely for the next phase of data, largely because of the fact that regulation is going to be a big component of this going forward. And regulated markets are what New York does for a living, right? And so, I think fundamentally you're going to see, you could see the next phase of the data transformation that's occurring sort of globally, have one of the epicenters be New York.
Kirk, this is kind of the last question. Right before we finish, I would love, and I'm very curious to hear your answer on what is your most controversial opinion.
Um, my most controversial opinion, um, if you look at technology transformations over the last 30 years, the list of companies that were massive bellwethers in the space only to be, sort of uh, changed and evolved over a period of a couple of years. I look at the sort of the cell phone market and the transformation of the cell phone market. In the transformation of the cell phone market, you had the Motorola Razr in 2005, and then you had the Nokia 1100 in 2006. And then Apple came along and those guys were gone. And so, I do think that there is a world where, if you look at the current tech stack, that, if you're building in those systems, you could be building on Nokia. Just before Apple comes along, because Apple opens up the ecosystem and it becomes a different game. And so, when I think about the current, sort of data stack, my big question, sort of with them is, are they going to be able to move flexibly into a market structure world? If that is the way we go, sort of if we're going from Nokia to Apple, is the current sort of data stack set up for that?
Kirk, this is great. Thank you so much for being a guest on IC Data People.
Thanks for having me, guys. This was great.